So our topic today is commercial mortgages one-on-one with our very own Ermanno Tasciotti, our in-house small commercial expert. He's going to walk us through a very interesting presentation today. This is recorded, so it will be posted on our website afterwards. So don't worry about missing something if you get a call or taking notes or anything like that. And we also have other recordings on our website as well. And I'll post the link in the chat for you guys to check out. And we also send a lot of content and recordings through our emails. And I'll also send a link to subscribe to those in the chat as well. So yeah, if you have any questions, please post them in the chat. Ermanno will get to them at the end of the webinar. And without further ado, Ermanno, take it away.
Thanks, Emily. Welcome, everybody. Thanks for joining. And again, once we apologize for the slow start. So, my name is Ermanno Tasciotti. I guess I'm the commercial manager. I guess that's my title. I've been a BDM, RSM, whatever you want to call it, but my focus here at Glasslake is small balance commercial. And today what we're going to do is basically a commercial mortgages 101 is what I like to call it. It's like the basics. Now, there's a lot of things when it comes to the basics that I could talk about when it comes to commercial mortgages. But today it's going to be more, it's going to be about the story. It's going to be like an overview of a deal. I'm not going to really drill down too much, but you'll see as I go along. It's going to be about the story behind it. Now, commercial mortgages, kind of like residential in the private space, are unique because every deal has a story behind it. But when you're dealing with an A residential deal, you just input it on Philogix, you input it on Velocity or Scarlet, and away you go. You just fill the boxes and move on. Private deals, alternative, when you start getting a bit out of the box, they have a story. You got to explain, why am I going here? Why can't I get it approved at a Skate Bank? All commercial deals are like that, whether it's a prime deal or whether it's an alternative prime private. There's a story. There's a unique story. You just can't fill an online application and then get the deal approved. There's got to be the story behind it. So today we're going to talk about understanding the story. When you've got a deal in front of you, what are the things that you have to look for in order to understand what you've got to deal with? And then once you have all that knowledge from the deal, how do you tell the story? And finally, recommending the deal. And that comes from understanding the story and why you think this is a good file to get approved. Now, recommending the deal. Now, I apologize if I say things to people that are the obvious that I recommend the deals all the time. Like, what are you talking about? But with some deals, you just push the button and submit it through. But with commercial, it's really important to stand behind it. I'm going to put a little asterisk beside that, though, because with Glasslake, we really don't have to worry about recommending the deal, and you'll see what I mean as we go further along. Now, and then I'm going to talk about the Glasslake difference. That's exactly what I mean about the asterisk. What makes us different when you're doing this sort of approach? Now, a bit about myself. Been doing commercial mortgages since 2007. Been doing mortgages in general since like 1997. But focused only on commercial for the last 17 years or so. I did a stint at CIBC. That's where I learned everything. Been a broker for about 6 years out of the last 25, sporadically here and there. And it was with Home Trust for a bit. Now I've been with Glasslake since the last 2 years. Okay, so ask the right questions to understand the story behind the deal. That's pretty obvious. But let's just step back for a bit, because when it comes to selling in general, and even with mortgages, a lot of people tend to, when you're trying to promote something or sell something, it's typical of salespeople. And we are, at the end of the day, we're salespeople. Even though we're trusted financial advisors, we're counselors, whatever you want to call it, we're trying to sell our product. We're trying to sell ourselves. And the best way to sell is not do a product dump. Not to say, I do this, we have this, our 2 years like this, our rates are this, our fees are this. We go to the sale. Like, that's fine. You can give that information. But when you're trying to win a deal and you're trying to sell, the best thing to do is to ask the right questions. Kind of like, I don't know if I've never seen The Wolf of Wall Street. People are surprised, but I've seen snippets of it. I know that's a great salesman movie. There's, sell me this pen, sell me these glasses, or I don't know if anybody remembers Glengarry Glen Ross with Alec Baldwin, the famous scene where he goes, ABC always be closing. There's a lot of these sort of salesman-y sort of gimmicks, films, slogans, whatever, whole total sales training seminars like Tony Robbins and all this other stuff going back, decades. But when it comes to selling, the bottom line is this: telling isn't selling. It's all about asking good questions. And that guy, Richard Franey, is kind of like my mentor. When I was at CIBC 25 years ago, Richard Franey was the best salesman I ever met in my life. He was the best presenter, facilitator I ever met in my life. And he's one of the most decent human beings. He was great, and I learned a lot from him. But that was the saying that he came up with. Don't tell them what we can do. Don't tell them it. You got to ask questions from the client. And I know that like it sounds obvious in our profession. You got to find out what the client's about. But at the end of the day, when you're trying to position yourself and sell your particular product, or you're trying to sell a particular solution, it's all about having the right questions asked and finding out from the client what is important, what's motivating them, what they need. They may say that they want this, or they may want something or need something in specific, but we're the professionals. You guys do this every day. They don't get mortgages every day. They might get one or two or three mortgages in their lifetime, depending on how many times they buy a house, and if they're not an investor. You guys are doing it every day, so you are the professional. So you've got the questions to ask them. Okay, so when you are going to try to look at a commercial file, and you know what, I'll even say this can be translated to a residential file. The same approach could be made. The 3 points of the triangle might be a little bit different, but I think they're pretty much close. There's a little bit subtle differences. But I call this how to see the deal. And this is all about understanding the story. So when you understand the story, you try to get an overview. How do I put this deal together? How does it work in my mind? Try to focus in on these three components, these 3 points of the triangle. It could even be like a three-legged stool. Some people have different analogies to it. And the way this came about for me is when I first started my career at CIBC on the commercial side, 2007. I used to work with a bunch of really old school, way back from the 70s, 80s commercial mortgage lenders. And when I'd had a file and I'd, walk into their office and say, I got a deal I want to talk to you about, they say, okay, tell me about the deal. And I would be floundering. I would be all over the map. I would talk about the address, the borrower. I would be talking about, the condition. I would be talking about stuff that it just didn't make sense. And they'd say, no, come on, tell me about the deal. I haven't got all day. Like, you've only got 5 minutes of my time. Tell me what you need. So it really frustrated me until I came up with, I said, look, I got to come up with a systematic points to identify the hit. It's a purchase, it's owner occupied, it's located here, it's a good building, like good condition, it's 50 years old, 20 years old, 2 years old, whatever. And I developed this sort of systematic almost approach on how to see a deal. So in my mind, if I have to tell somebody about it, I have all these points in my head that I'm going to identify all these fine points, all these things that I need to understand. And as time went on, I don't know if anybody here does commercial mortgages on a regular basis, but um, this is applicable to whether you're dealing with Glasslake Funding, where we take our deals through Philogics and it's almost quasi-residential file. The way we underwrite, it's almost residential, but we do commercial. To something like a CMHC MLI Select commercial project, which stack of papers this high, or hundreds and dozens of PDF files that you got to use to supplement the deal. And usually at the beginning of that file, at the top of the file, is what we call an executive summary. It could be anything from a 1 to 5 pager that summarizes. That's the summary. It could be 5 pages long. That summarizes what you're looking at. This is the deal that we've got in front of me. I need a certain amount of money, and this is why. And then you go into the finer aspects. This is that. But you can basically use this in a 5-minute conversation, in 10 lines in an email, or 5 pages in an executive summary, or even beyond, because it all springs from that. It all depends on how detailed you want to be. There's a couple of points to look at: who your lender is, who your audience is. You're not going to prepare a stack of papers this long and spend weeks preparing a file to send to Glasslake. It just doesn't make sense. It's a waste of time. But if you know that this deal is warranted to go to a Peak Hill or an Equitable or a Schedule A bank, you're going to have to adjust your submission accordingly. You're going to have to build in a bit more meat into the application. With us, it's not the case, and this is one of the beauties of dealing with Glasslake. We try to make things as simple as possible. We focus on smaller stuff. We're doing larger stuff now as well, but we want to make it as easy and as simple as possible for the broker when they're dealing with us. And that's the whole purpose of this discussion today, is to how to see the deal and put the deal together. So after my initial floundering and getting flustered with these guys that I used to work with, these old timers, I developed this system. And whenever I'd go in there and talk about a deal, it was in and out in 5 minutes. Like, we would have an idea, they'd have a better idea. If I needed to build up the file or I needed more information, I knew what to. I came out of that initial brief meeting with something. So the 3 points of the triangle. These are the 3 components that make up any commercial deal. We start off with the real estate. So where's it located? What type of property is it? I'm going to get into more questions later, but that's basically, we're going to talk about the real estate itself, the physical aspects of the building. And then the next part is the covenant or the borrower. Sometimes we call that the sponsorship. So when you get into these, CMHC deals and these bigger deals and these more in-depth deals, you see the word sponsorship as opposed to borrower, or covenant as opposed to borrower. And then the third part is the cash flow or the income, the money that's needed to support the mortgage that's being asked. So we're trying to get a mortgage for a client on this property. We need to know about the real estate, we need to know about the borrower, and we need to know the money. If anybody's ever called me to review a deal, you'll notice my conversation usually goes that way. So it's like my brain works these 3 things. I'll ask a couple of other things ahead of time, and you'll see what I mean later. And I just go in order and I knock them out just to get an understanding. And with Glasslake, again, there's certain aspects, like I said earlier, depending on your lender, you're going to prepare your file a certain way. Depending on the lender, you're going to know what our pain points, our pressure points are. So, for example, the covenant and the borrower, we need a minimum of 650 credit score. That's something that I try to establish right away. How's the credit? Because if the credit's below 650, we probably can't do anything for you. No point in talking about it. We have options we could discuss about bringing other borrowers on title and stuff like that, but I go through this process, bang, bang, bang. Now, you'll notice I do a lot of things in 3s or 5s or 7s. It's an old marketing thing. So the 3 points of the triangle, when we're looking at the deal, and you're trying to put a loan together. So that's the file. That's when you're looking at the physical, or the questions that you need to get, the details you need to get. But when I look at a lending decision, and again, this could be obvious to a lot of you, I always came up with this. I said, okay, you got the details and the information. That's number 1. That comes from the questions you're going to ask, which we're going to go through. That comes from the answers to those questions, the information that the client's going to tell you. So what's the address of the property? 123 Main Street. What's the rent? $5,000 a month. What do you do for a living? I'm a software engineer and this is an investment property, etc. So it's the details and the information. That's part 1 of the lending decision. You ask the questions, you get the answers. Then there's the documentation and the confirmation. Okay, show me a tax bill to verify the property. Do you have an appraisal? Whatever. You're a software engineer. If I need a job letter, we don't need stuff like that typically at Glasslake, but as a lender, we might need something. Provide that. Whatever you answer, whatever there's the answer to a question, you should back it up with documentation. And then the last is gut instinct or feel. That is something that comes with experience, that comes with time. You can have a lot of great stuff in points 1 and 2. But if something's telling you that the deal doesn't seem right, that's your gut instinct or you feel. All combined together, those 3 make up the lending decision. Okay. So going back to the triangle, the real estate. So when it comes to understanding the story, you're going to ask questions about the real estate. With Glasslake, all these questions here, you don't need to have. Again, we're simpler, but I'm just looking at this from whether you deal with us, this is a basic overview, or whether you deal with another lender. Number 1 is, where's the property located? Some lenders have geographical restrictions. At Glasslake, we don't, but we tend to have restrictions when it comes to if it's too rural. If it's in the middle of nowhere, if it's a mansion in the middle of a cornfield and you can't see your neighbor on either side, that's probably not for us. You got to have a somewhat developed area. If it's sort of borderline, always talk to the RSM, always run it by them. whether it's residential. If it's commercial, then you run it by me. Say, look, is this something you guys would entertain? But to be clear, Glasslake will go to anywhere in the province. We love Thunder Bay, we love Timmins, we love smaller markets. That's not a restriction for us. Some lenders do have that. So again, going back to the earlier point about knowing who your audience is, whether you have to have a big package or not, if you got to go to Equitable, Equitable won't do under $1 million. Equitable won't do everywhere in the province. So you got to be aware of that. With Glasslake, we'll go anywhere in the province. So property is located, address. How old is the property? If it's really, really old, then we're going to have an issue with the condition. We want to make sure the condition's, pretty good. So that tells us a lot. What is the condition of the property? Are repairs required? It could be 50 years old, but it's at the end of its life on the roof. It's at the end of its life on its HVAC system. Those are factors that we need to consider when we're making the lending decision, because if we're going to give somebody $1 million on a property worth 1.5, but it needs $300,000 in repairs in the next 2 years, we're basically we're sort of disadvantaging, it's not a conservative decision. We have to factor in that $300,000 into the decision. Do you have the money? Do you have the 300 grand over the next couple of years? Are you going to make those repairs? The property isn't worth 1.5 if you've got $300,000 worth of repairs to make, and our loan is not going to be $1 million. It's going to be affected by this 300 grand. Is the property owner occupied, or is it income generating? So you'll hear that a lot. That's one of the big questions we ask at Glasslake, because we work with business for self and experienced investors. But we need to know which is which, what's the case in this particular file. Is the property multi-tenant or single use? So if it's, does it have 8 units or is it one big unit? And again, knowing certain restrictions. So now I just told you about our 650 credit score thing. If we're dealing with a single tenant, we have a square foot restriction. We won't do anything over 25,000 square feet. Now, if it's 30,000, can we do an exception on 5? Possibly. Contact your RSM, but just be aware of certain things with each lender, like what their pain points are. So multi-tenant or single use. What is the size? I just addressed that. What is the lot size? If you've got a 10,000 square foot box on 5 acres, even though we'll go up to a certain acreage, that property is going to have a higher value. We won't lend on land, because that 10,000 square foot is on a property that we would call excess land from a commercial standpoint. 10,000, we would only, if you look at the valuation, because a lot of appraisals are done on the income that's generated by the property, there's going to be a lot of excess land there that we really can't use. We really can't give value to it because it's not income producing. So we need to know what the lot size is. Is the property a condo or is it freehold? Are there any environmental concerns on site or nearby? That's a big one. Environmental issues can kill a deal, and you're done. There's really not much you can do. There are solutions, but they could be costly, but it could kill a deal. Like the client is not willing to pay the money to clean up, and the bank's not willing to provide the money until it's cleaned up. So remember I said about questions, answers, and then documentation and confirmation. When it comes to the real estate, the kind of documentation we look at is the PSA, the purchase and sale agreement, the MLS. A lot of commercial realtors have sales packages, and then there's the third-party reports, appraisals, ESA's environmental site assessment, BCA's building condition assessment. Getting an older one is fine at first because it'll tell us what the property looks like. It'll give us some insight on what the value might have been 2-3 years ago, and it just gives us a big, a way to look at the deal at the beginning. Also, you as a broker when you're looking at it, current mortgage statement, survey. If there were a repairs done, if the property was done a year ago and now they figure it's gone up 40%, give us a list of repairs or renovations and invoices, just like a residential deal. Then we go to the covenant. Who is the borrower and guarantors? Is it a numbered company? They tend to be with commercial. And who are the people behind that numbered company? They will be providing guarantees. With all small commercial loans that I've ever seen in my 17 years, I've never seen one without a personal guarantee. With Glasslake, same thing. We will need a personal guarantee. So if it's 123, and 123 Ontario Inc., the people behind it will be personally guaranteeing, even though it's a corporation. What are the sources of income available? Now, this is important at Glasslake. Now, generally, we just like to know if you're dealing with an Equitable or another lender, they want to know what the individuals do for a living, how they make their money, and they just acknowledge that. With us, we actually can use that income. So that's always a big question that we're going to ask. How do they make their money? Do they make their money from real estate alone? Do they make it from the business that occupies the real estate? Or is this an investment property or a business that one of the children or one of the family members runs? And again, they're a software engineer, they have a day job. What sources of income are available from this guarantor that's behind this property? If they are business for self, BFS, what is the business? What is the history? Find out, how long you've been doing this and try to get a sense of how successful they are, how things are going. Do they have any other assets? What's their personal net worth like? They've got 20 other properties and their net worth is, $10 million, let's say. Are they experienced? Again, that is a big question that we ask. I think there's a question. Hang on one sec. I saw a question in chat. Based on the square footage comment, you stay away from warehouse. Not at all. We love warehouse. Actually, whoever answered, Dan, warehouse is very, very hot. It's always been hot. It's been hot since COVID because of obvious reasons, Amazon and people's warehouse has always been commercial real estate goes in cycles. Years ago, it was retail that was really, really desirable. Multifamily, like rentals, are all like residentials, are always at the top. Those are the desired ones. Those are the best ones to go for. But there's times it's cyclical. Office was really hot. Office is terrible right now because of COVID, right? But warehousing is very, very desirable. They're deals that anybody would jump at. Are they experienced real estate investors? We like to see that because we want to deal with people that know what they're doing. This isn't their first rodeo. There's no risk of them, screwing up, because it's their first time. There's risk of them screwing up because it's their 10th time, but there's less chance of that happening. What is the credit history? The credit score, credit bureau. Again, with Glasslake, very important. 650. If you're not tall enough, you're not getting on the ride. You got to meet 650. Why are they financing the property, doing the deal? So that's always a big question that people tend to not ask. Like, of course, you're going to say, okay, you're refinancing. What's the purpose of the funds? But a lot of times, even if they're buying, ask them, say, how come you're buying this property? What's motivating you? Like it's a good investment. Why? What do you see? Try to get some information that may or may not affect your submission, but may affect your understanding of the deal and the client's motivation. It gives you a bit more insight into how they operate and what they're thinking, right? Does this make sense for them? Again, questions, documentation, articles of incorporation or an organization chart for the holdco, articles of incorporation for the opco, the operating company. If it's business for self, that's occupying the space, that's the operating company. If it's a holdco, a numbered company that's owning the building, that's the holdco. Mortgage application for key principals, personal net worth, we want to see that. Credit bureau. Now, T1 General's notice of assessment employment letter, that's not for us, that's for other lenders, but that's the documentation you would have to support the covenant. And then 6 months bank statements, if applicable, 6 to 12, depending on who it is. When it comes to cash flow, asking the right questions. What is the tenancy like? Vacancy. Is there a high vacancy? What's it been historically? Do you have leases? Are they net or gross? I can go into detail there. Are the rents at market level? Is the market rent 2,000 a month and they're getting 1,000? Why is that? Or if it's 2,000, they're getting 3. How the hell are they doing that? Historically, has the income been stable and consistent? Will it be consistent in the future? If not, will it be higher or lower? We're trying to get understanding of where the property's going, and I'll explain in a sec how we determine that. If owner occupied, how are the financials? What's the net income look like? The financials are not something we look at Glasslake. That would be more something for an Equitable, for maybe a Peak Hill or whatever, or a bank, definitely a BDC if it's a business for self owner occupied situation. That could lead to a lot of questions, slows things down. We just try to make sense of the deal, and I'll talk more about that as well. When it comes to income, we need to know this: how much is it? What was it? And what will it be? So this past, present, future is very important when it comes to income. That's the same with residential, but with commercial, we really want to be focused on that. The documentation to support the cash flow, leases, rent roll, financials for the property, which is basically income and expenses. So you'll have the rent and then the expenses attributable to the property taxes, property insurance, utilities, whatever. And it depends on how the leases are set up. Many times the tenants pay for all the expenses. If you're a really good landlord and know what you're doing, you're going to make your tenants pay. Might sound like a shitty thing to do, but that's the way it works. Because if I'm saying to you, Emily, I want $1,000 a month rent, and my expenses are $400 a month. If I have to pay the expenses of $400 a month, Emily gives me 1,000. I end up with 600. My rent's not 1,000. It's actually six. That's considered a gross lease because I'm paying all the expenses. I'm gonna say, Emily, your rent's $1,000 a month, but you got to pay these expenses as well. I end up with $1,000 net. That's called a triple net lease. The lease is carefree to the landlord. They actually use that word carefree, meaning I don't have to worry about anything. I just get my rent and I walk away. So when it comes to cash flow, so for those that do primarily residential deals, think of it this way when you're using commercial as an analogy. With residential deals, you generally ask for a pay stub. Pay stub shows what's happening today, the present. I made this much money. Here's my pay stub from last week. If you look at a T4, T1 general notice of assessment, that's what happened last year, 2 years ago. You want to see how did I do last year? And then if you want to see how am I going to do in the future or what's my agreement, you get a job letter. Job letter says, Cole Bannister, this is what he does for us and this is how much he makes and going forward this is going to be what his income's going to be. When it comes to commercial, a rent roll is the pay stub. It shows what's happening today. A rent roll lists all the tenants and shows what the rent is. We want to know how much money is this building getting from all these tenants right now. That's the rent roll. It lists the tenant's name, the unit number, sometimes it has the square footage, and how much they pay per month per unit. The financials are the income and expenses. So it shows the rent coming in and it shows the expenses taken off. That's the past. That's what it did last year. And then the leases are going forward. It's like the job letter. I promise to pay Ermanno $1,000 a month for the next 5 years. And then my lease expires and I have the option to renew. So just think of that, past, present, future. That's really critical when you're doing a commercial mortgage and the analysis behind it, because there's so much. I could go on and on and on. I like to talk, by the way, but I can go on and on and on how you can drill down when it comes to the doing an income analysis to determine not only what the value of the property is, but how strong this deal is. Okay, so you get all those questions, you get all these answers, you got all this documentation. So in your mind, I'm going to go into the office and I'm going to go tell, I've got all this information. Now I got to go into the office and I got to go tell my old boss about the deal. Now, if you can't explain it simply, you don't understand it well enough. And this was the whole thing. I used to have all this information because I would try to get as much as possible. And sometimes I wouldn't have all the information because I didn't have this sort of systematic approach that I just outlined. I would just ask the borrower questions and then I'd run into the office and I wouldn't know what the hell to say. So if you can't explain it, you don't understand it. So you got to be able to understand it so you can explain it. So I came up with this, and this is pretty standard. You'll see this a lot. I didn't invent this. This has been around forever, but there's different versions of it. And this is my version. And put together the story before sending the deal. Put together the story in your head before having the phone conversation with me. Put the story together before you send the email out. Put the story together, Ermanno, before you go talk to your boss and tell them what's what. So purpose, purchase or refinance. Owner occupied or business for self. So I've got an industrial unit in Collingwood and it's going to be owner occupied by somebody that fixes motorcycles or whatever. Loan amount, down payment, equity, LTV. Get all that out of the way. I'm looking for $1 million. 500,000 is coming from their own resources. Loan to value is going to be 67%. And then you go into the triangle. The real estate, it's a warehouse in Collingwood. It's 15,000 square feet. It's been around for 5 years. It's located here, and you just a little blurb, right? When you're talking to me over the phone, I don't need to know all this stuff. Or when you're sending the email, you don't have to go into detail. Or when you're structuring your loan note, you could go elaborate a little bit, but you don't have to go too much with Glasslake. Okay, just give us the address, the type of property, and we should be good to go. But again, when you're dealing with other lenders, it depends how deep you have to go and how extensive you're gonna expand this. And the covenant, same thing. It's Cole and Emily. They're gonna open up this motorcycle shop in Collingwood. Cole and Emily's Motorcycles Inc. is going to be the operating company, and the numbered company is going to be 123 Collingwood Motorcycles, and they own the building. And usually what happens is when you have a holdco and an operating co, even though it's the same people, they pay rent. Believe it or like that's how but we just acknowledge that we don't use those numbers, but other lenders will. They're going to look at the lease between the whole, between with each other. They want to make sure that it's reasonable. The appraisal is going to support it. Then the cash flow and income. This is the business for self. I've got 6 months bank statements, or if it's tenanted, let's say that Cole and Emily don't own the building, but they own the business and I own the building, then the money's going to come from the rent that they're going to pay me. And I'm the borrower. So Cole and Emily are just the tenants. So we don't need to know anything about them. You need to know a lot about me. So I'm the experienced investor. They have a lease with me. Then what's my story? What's the income behind it? But if it's Cole and Emily and they're borrower and tenant, owner occupied, then we're going to need more about them. But we need to know basically how do they make their money? Where does their money come from? And when it comes to the covenant and the borrower, what's their credit score? What other real estate do they have? What other assets do they have? What's their position? And you can summarize this in a couple of lines. Or when you're talking to me on the phone, just tell me. Now, the last part, you don't need to do with in a conversation. You could say, oh, by the way, I've got an old appraisal and I've got this. I can get bank statements. Yeah, sure, tell me that, but it really doesn't make a difference to me when you're vetting the deal. When you're submitting it to the underwriter through Glasslake, absolutely say, I've got this, this, and this. When you've got your big package and you're sending the deal to, more, you're going to have to list all the enclosures and documentation, and they probably have to be in that package. You're going to have to get that stuff up front. So again, depending on the lender that you're dealing with, how deep do you go? How much time do you have to spend? And then the conditions on your recommendation. I recommend this deal. I think we should do this deal because good real estate, good borrowers, good credit, etc. Recommend the deal. Stand behind the deal. And this is always the thing that I always liked when I was a lender, and I did it as much as I could when I was a broker. Tell the lender what you want and why. Try not to ask, what do you think? Lenders hate, except Glasslake, put an asterisk beside it. What do you think? They hate when you just say, here, I got a file, I've got a client, I want to give them a mortgage. What do you think? What can you do? They're not going to, especially the equitables and the PKLs and all that, they're not going to waste their time. They're going to say, hey, listen, go put your file together, come back to me, tell me what you want and why, and let's see what we could do. Glasslake, again, it's like a quasi-residential deal. Just get the details, the real estate, the borrower, and the cash flow. Just get all that basic stuff. And we will say, what do you think? Say, look, can I get a mortgage for 800? Can I get a mortgage for $1 million? Call me. I'll help you structure it. I'll look at it and say, you could probably do this much, right? So you don't need to know all that stuff as long as you get the basics. That's one of the good things about working with us is that we'll work with you to try to get the deal done. You build rapport with the underwriters, develop your brand, set yourself apart as being knowledgeable. It'll help make future submissions easier to approve, and you will become a preferred broker by recommending the deal. They will look forward to your deal if you stand behind it and recommend it. So this is sort of the Glasslake difference. This is what we're about. We're your small commercial pros. We're ideal for seasoned investors or self-employed clients. Loan to values up to 75%. Amortization up to 30 years. Now we do P&I. We don't have one year money, 235. I thought I had another question. Debt service coverage for people that understand is 120. Don't worry about that, but for those that get it, that's our ratio. Asset class, standard and unique property types. We'll do like anything 5-plex and up. We'll do mixed use, storefront and apartment. We'll do warehouse and industrial. We'll do self-storage. We'll do bars, restaurants, some automotive, case by case. What we won't do is land, construction. We won't do any houses of worship, churches, synagogues. We definitely won't do any gas stations. Hotels, motels, I would say we don't do, but we're starting to look at them. So if you have interesting hotels and motel property deals, reach out to your RSM, reach out to me, and let's just talk about it. I'm going to say we don't do them, but we might. We'll look at them. So we're kind of out of the box on some types of real estate. I really like the automotive because not everybody will do it. We'll do it on a case by case. Location, primary, secondary, and some tertiary markets, meaning basically everywhere. We don't have a population restriction, right? As long as that specific area is developed. If there's 5,000 people in that town and you're surrounded by 4,999, well, we'll look at it. And the amounts will go as low as 200,000. This is an advantage that we have over a lot of other lenders. Some people won't go below $1 million. I love the people at Equitable. I think Equitable is a great bank, a great organization, but they won't do anything under $1 million. That's, not a slight against them, but that's just a fact. We will. And our approach, we do what we can to make the deal work. You work with your underwriter, work with me. It's not all about this data and all that stuff. This is just helps you put the file together. We want to flesh it out if we have to. You're coming to us because nobody else will do it. Like a traditional lender won't do it because it doesn't meet a certain threshold. So there's a bit of what we call hair on the deal. It could be hairy because of the location. It could be hairy because of the income. Credit, we don't deal with hairy credit, but we do what we can to make the deal work, and we pay our brokers 100 basis points on 2, 3, and 5 years. Those are our terms. I repeat, we pay 100 basis points. So you charge the borrower 1.5, we turn around and give you 1 from that. If you want to charge over and above that, that's up to you. So again, put together, tell the story. I'm repeating the slide. Put together the story before sending the deal. Explain what you want and why we should approve it. Okay? Purpose, loan amount, everything we've already covered. Now, okay, so the why came up first. That's okay. This is typical of when you structure a loan note based on that. Okay, some questions that typically you might lead, and this is for Glasslake. This is not for most other lenders. This is for Glasslake. Purpose and background, refi or purchase, owner occupied or an investment property. Refinance. These are the questions for a refinance. What's the loan amount the client is looking for? What's the estimated worth of the property? When was the property purchased and what was the price? If it's a purchase, what's the purchase price? What's the loan amount? How much is the down payment? Source of down payment? Try to have these in your loan note when you're submitting it through Filogix. Try to have an understanding of this when you're going to call me. And for both, what is the closing date and the requested LTV? The real estate, address of the property and property type, any pertinent details such as environmental. It's located at 123 Main Street. By the way, there's a gas station next door. It's at 456 Simcoe Street. There's a dry cleaners next door across the street, or it's beside a junkyard. Those are environmental issues. Dry cleaners, junkyards, gas stations nearby are very, very worrisome. Not that we can't do it. We would need a clean report. Borrower in the covenant, and that's basically all you need for real estate when you're dealing with us. Okay, you don't have to go through all that long litany of information, but these are basically, this is the information you should send Glasslake if you're submitting the deal. Borrower, who, what is, are the borrowers, numbered company individuals, just identify who's borrowing. And I underlined and italicized, what is the credit score, overall credit? If the credit score is not 650 again, can't proceed. And then what is the total source of income, details about their business, owner occupied, and then cash flow. Where's the cash coming from to pay our mortgage, rent, business income, other sources as per above. So I didn't like putting this whole, and then why? Why are you doing this transaction? But when you're putting your loan note together, to me, it might seem a little bit busy, but that's basic information. If you can give us all that information, you're going to get to a commitment very, very, very quickly, in my opinion. Just list all that stuff out. Try to minimize the back and forth between the broker and the underwriter. And what I used to always say is, make your first loan note your second loan note that would have happened if you didn't, do it properly. By that, I mean, a lot of times, this is from my days when I was at CIBC, somebody would submit a deal and it would be their first loan note, and then the underwriter would come back with a whole bunch of questions, and then they would submit their second loan note to answer those questions. Make your second loan note your first loan note, if you know what I mean. So pretend you're the underwriter. Look at your submission and say, what am I missing here? What's the underwriter going to pick at? What are they going to ask me? And then submit it so it's a lot quicker. Also, there's this thing where, and Doreen Walsh told me this one. Doreen's wonderful. When you submit a loan note, the underwriter's up here and the borrower, the broker, or the submitter's here. If you keep missing information and it's been omitted, you keep getting into a hole. So now the underwriter's still here, you're down here. Now you got to dig yourself out of this hole to get to. Because if you don't have certain details, it's going to sort of, then you got to come back and got to regain that sort of credibility, if you know what I mean. So try to submit the loan note so you and the underwriter are seeing eye to eye on the deal from the get-go. Okay, Q&A. I want to thank you for your time. And these are the four of us, the fantastic four, I guess. Edwina, Felicia, and Jake are your RSMs, and I'm your commercial guy. Now, let's say I got a question here. You mentioned office space is not doing too well in the commercial sector. Is there a website or resource you can recommend? We can check to see what is doing well and not doing well. There's a lot. Now, CBRE is pretty good. They come up with annual stuff. CMLS has a good report. CMHC has a lot of data, a lot of data. Just start plugging yourself into the commercial sector. Look at those websites, and from there it could spill into other. Look at the industry shows. They just had the real estate forum last week. I didn't go to it, but it's expensive. I wouldn't recommend going to that. But start just looking at, call me. We could talk about stuff, right? And just try to put you together your own sort of sources of information. But those are good places to start to get a sense of what's good and what's not. I just was at an event with there's a company called CoStar, and they did a wonderful event, and they talked about real estate out west, Alberta and BC, how it was, how it compared to Toronto and that sort of thing. Do commercial lenders accept fair market rent, or lease agreement must be provided before closing? What if the property is not tenanted and it's a purchase deal? Depends on the borrower, on the lender. We're good with a vacant property. You're buying a property and it's vacant. It's logical. I'm buying the building. I'm going to get my own tenants in there, or I might be going in myself. Yes, we look at fair market rent. How do we offset that if it's vacant? Well, we got to see what the real estate's what it looks like, where it's located. Is if it's in Toronto, it's gonna lease up fairly quickly, especially if it's a residential. If it's a storefront on the Danforth, there could be some challenges there. So then, what we're going to rely on, because you got to get a business to go in there, and depending on the economy, businesses might not be businesses are going to be shutting, and people are going to be having vacancies. So then we rely on the experienced investor. We rely on their net worth. We rely on the appraisal to say vacancy on the Danforth for this type of property is 2%. Well, if it's 2%, that's pretty good. If it's 10%, then that's scary. So that means you're going to buy this property. We're going to give you this mortgage, but you're not going to have money coming in from the rent to pay us. Okay, so what else do you do for a living, sir? I'm a software engineer. I make 400 grand a year or 300 or whatever they make. Okay, then we're going to rely on that to pay your mortgage. If you go to a bank lender, they don't care how much you make. You can make $2 million a year. They're going to say this property has to sustain itself. And if it's vacant upon possession and there is a weak net worth, they'll do a holdback. So if the mortgage is $1 million, they're going to fund $1 million. They're going to advance $1 million, but they're only going to give you, let's say, 800 or 900. And you say, well, what's my other 100? We're going to hold on to that until you lease up and get a tenant. So you're going to have to come up with that other 100 on your own. When you have a tenant in there, we're going to send somebody out. We're going to make sure that the tenant's in there, open for business, paying rent. We're going to give you your 100,000. So that's called a lease achievement holdback. There's different terminology that's used. We're not going to do that. Again, dealing with us is very, very straightforward. We try to simplify, as we say, we like to take the chop out of the process, like the chop, Glasslake, water, that sort of thing. We try to make sense of it. If you've got 10 other properties, your net worth is 10 million, and your property is vacant, of course you're going to lease it up. That's what you do for a living. That's what you do for money. So, we're gonna go on good faith. Credit's got to be good, and everything else has got to be good. So that was from Angela. Thanks, Angela. Hope all is well. Hopefully you remember me. Paul, what lender fees are normally involved in the transaction process that clients should be made aware of? Do clients require their own solicitors or through Glasslake? Your thoughts? Okay. Two lawyers. Glasslake's lawyers, client's lawyers. Client pays for both. Legal fees, I'm always at a loss when it comes to legal fees, believe it or not. I don't like answering questions because I'm not a lawyer. So it could be 3,500, it could be 10 grand. I don't know. I always, when clients used to ask me how much are legal fees, I used to say, talk to your lawyer. They have a sense of what the deal is like, and they'll tell you what our lawyer is going to cost, roughly, ballpark, right? In terms of lender fees, our lender fees at Glasslake on commercial are 1.5. We pay one back to the broker, so we keep only a point, half a point. Other expenses are going to be appraisal, environmental. Appraisals could be anywhere from 3,000 and up. Environmental could be phase one, could be 3,000 and up. If the phase one says we think it's dirty, we need a phase two. That's when they go start poking holes in the ground and testing water. That starts at 10 grand. And then they get the results. And if it comes back and says it's clean, then you spent 3,000 plus 10, at least you clean. If it comes back dirty, you're up to 13, maybe 15, maybe 20, and you're saying this thing's filthy, it's got to be cleaned. And they'll say it's going to take 100 grand to clean it up. Now you're at 130. You know what I mean? So environmental can be scary. And phase one and phase two depends. So that's what it's going to come down to. Um, Building condition assessments, that is some when an engineer goes out and they start checking the windows, the structure, the brickwork, all these sort of systems of the building, and they'll come back and say they'll give you a 10-year horizon and say this building needs windows in year one, they're going to cost 40 grand. It needs HVAC in year four, it's going to cost 50 grand. It needs minor repairs in years 2, 3, 5, 7, and they'll say 2,000, whatever. And then you'll see it all broken down on a spreadsheet what this building is going to need in order to be maintained. And as a lender, if the building's shitty, you're going to decide, I'm going to give this guy $1 million and he needs $500,000 in the next first 3 years. I don't think so. I don't think I'm going to go that high in loan to value. We're going to have to cut back on the loan to value, or we're going to do a holdback. He's going to spend his own money to fix it. Then we'll give him the mortgage. So there's all kinds of things that can be done. We don't go down that road with Glasslake. We're more basic and straightforward on the condition of the building, whether it's good or not. And you know, so I think I'm losing some of my questions here. But good question. If the final loan amount is slightly under 200, would you do smaller? Of course we would. We would look at smaller deals. It depends on the situation. Absolutely. We won't do 100, but if it's, 180, 150, we'll look at it. I can't speak for the underwriters, but we'll consider it. Are vendor takebacks allowed? At Glasslake, on the commercial side, we only do first. On the res, we only do first. On residential, we'll allow seconds sometimes in certain cases, but on commercial, no seconds, no vendor takebacks behind us. For a building that is currently under renovation, would Glasslake consider financing the building as complete appraised? No. So even though I said we will take a building that's vacant, it's got to be ready. It's got to be leasable tomorrow. We give you the money on Friday, tenants should be able to move in on Monday. If it's 90% complete and it needs another month, we won't give money to finish that deal. So the building's got to be complete, ready to generate income. Is there a standard of property insurance you're required? That is a great question, Matai. I'm glad you asked that because one of the things that we do, and I should include this in my presentation, that's a good idea, is we have a third party. So you pay for appraisal, you pay for legal, you pay for a bunch of stuff. We also have it sent to an insurance consultant, and what they do is they're going to review the policy on the property, and there's certain criteria, minimal standards that have to be, certain policies that have to be in place. So if there's $1 million coverage and we need 2 million, if there's a certain rider, let's say for water damage or something, or whatever our criteria is, that policy has to be brought up to our standards. And that fee can be anywhere from, I think it's 400 to 800, depending on that review, depending on the property. So we need that. That's part of the closing cost is an insurance consultant review. He works together with the solicitor, with the borrower on getting that. If BFS is under 1 year to provide 12 months bank statements with six, yes, that's something. I'm not an underwriter. I'm going to say, P. Michael, yes, just depending if everything else is good, and this is an outlier, that's one level of risk. Credit's good, property's good, history's good. The guy used to be a plumber, and he was a plumber for 20 years. He just started his business, and it's only been running for a year, but he's got 20 years of history, 20 years of income. That's an outlier. That's one level of risk that maybe we can overcome, right? Client has an existing property, so this is Tim, and the mortgage has an existing property and the mortgage with TD. So TD has the GSA of the holdco and opco. Yeah. Now, will you guys fun with TD? I don't have an answer for that. When it comes to GSA and all that, you know what I'm going to do? I'm going to get back to that on Tim. I don't know how we work with that, but I've had that brought a lot. When another lender has a GSA and we need a GSA as well, I don't know how we deal with that. So I will get back to you. Reach out to me on my email. I think Emily put it, or is on the bottom here. Send me your email and I will get back to you. And I'm going to work with Emily and Cole how I'm going to post this answer, if I can post it on the website so everybody has a chance to see what it is. But that's a very, very good question. Any other questions? Opening up my chat again. Okay. Starting commercial rate. Wilbur, great. You know what? We got to the very end, and that's the first rate question. That's the thing about commercial. It's not rate focused. Rate is important, but it's not the most important thing. So I'm going to go on my diatribe about rates. In all my years of doing commercial, the most important thing that a commercial broker is concerned with is, will you do this deal? Will you consider this file? Not that will you approve it, but will you consider it? And then the next question is, how much can I get? Because it's commercial, you want to use as much of other people's money as possible. You want to leverage as much as possible, right? So what loan to value can I get? How much money will you give me? And then the third or fourth is always, what's the rate? It's never the first and most important thing. It's always, will you do it? How much can I get? And how much will it cost? Our rates on commercial realistically are between 10 and 12. So 1.5 lender fee. You get 1%, half a point to us. Depending on the loan to value, depending on the credit score, depending on the property, depending on the deal, it will land somewhere between comfortably 10 and 12. Can you get below 10? Possible. Can you get over 12? Possible, but we don't like to see, I don't like to see a 3. And I don't think our president Mike likes to see anything beyond 2. I think it's 11.99. So we don't want to see a 2 or a 3, right? We don't want to see 12 or 13. And trust me, in the beginning, we had some deals at 14 plus, which I kind of lost my what when I used to see that. I go, we can't go to but that was where we were at, and we wrote, we issued commitments at that anyway. So good question, Wilbur, and it only took an hour. It only took 55 minutes to get to that question, when normally it's the thing that's most on people's mind. If there's no other questions, I really want to thank everybody for taking the time to attend. I like doing this. Reach out to me at any time. Now, you've got these 3 beautiful people beside me, Edwina, Felicia, and Jake. Look at who kind of looks after your area. If you know who your RSM is, then keep working with them. Always ask them. If they have if there's a deal that I have to look for on their behalf, I will vet it for them. They're very, very well versed and very good, and they're all great people. But sometimes you just come to me. If you need help with a commercial question or commercial file, I can get the ball rolling. And if it's a Jake deal, I'll speak to Jake's, if it's a Clear Trust, Clear Trust is Jake's, I'll get the ball rolling, and then I'll email my response. And I'll say, hey, Jake, Tim called, he's got this deal, like, here's my response. Can you follow up with him? He's going to submit it. Or can you do a follow-up call with him and work it out? So can I get a copy of this? There's going to be a recording on the website. There's a recording that's going to be on the website, if that's what you mean. As far as the PowerPoint, I'd have to ask. I don't know if we can release that. So, Cole, let me know if we can send it out. I don't know. Mattia wants to know. Okay, so there we go. Okay, so I think Mattia had the last question. Again, reach out to me at any time. Best way to get a hold of me is to email me. I'm terrible on the phone, terrible. I'm awful. I should be ashamed of myself, but email is the best way, and I will get back to you. So Emily, I think that's it. Do you want to come in and close, or am I good to go?
We're good to go. Thank you so much, Ermanno, and thank you everyone for joining. I reposted the resources page in the chat, so feel free to check that out. And stay tuned for another upcoming webinar.
Thanks, everybody.
Thank you.